Let me tell you a fun fact. Within the last 2 centuries, more than 90% of the world's millionaires have been created by investing in real estate. But if done incorrectly, without the right knowledge, required skills, or partners, it can also create a ton of problems and a lot of sleepless nights. You feel like sometimes there are way too many gurus out there trying to sell you on a weekend course, or just too much noise to cut right to the facts? Yup, we did too, and this is why we started this podcast. Our goal is to provide real estate investors, entrepreneurs, and enthusiasts with all of the most recent knowledge, secrets, tips, tricks, and tactics so that you can grow your own portfolios, increase your returns, net worth, and most importantly, create generational wealth for you and your loved ones. Remember, this is your real estate career. Information is your sword and shield, so eat hearty, prepare for battle, and grind your way to victory. My name is Tejas Gosai. I'm joined by my partner, Jeremy Moyer, and we welcome you to the Real Estate Investor MBA podcast. Hello, ladies and gentlemen. Welcome back to your favorite real estate podcast. It's Real Estate Investor MBA. I have my partner, Jeremy Moyer.
How you doing?
And always, we like to start with a thank you to everyone who's made our program possible. Spotify, Stitcher, iTunes, Google Play, we're all over the internet, social media. Thank you, Jeremy, for everything you're pushing out. And also, we got a totally revamped website. Check out www.rei.mba and let us know what you think. But Jeremy, we've had on amazing guests. We've constantly pumped out some good content, and we're keeping it alive. You want to tell everyone about the next one?
Absolutely. But just to mention, Tay just mentioned we have a new website. We also have sign up for a newsletter. Get on a mailing campaign. We have a lot of cool opportunities that I think people you want to be aware of coming in 2022 and the coming years ahead. So definitely check that out. Stay abreast of everything. But yeah, absolutely. Our guest today is Damion Lupo. So Damion is a professional real estate investor, a serial entrepreneur. He's actually a best-selling author of 11 books. He is a 4-time college dropout who actually was thrown out of one of his schools for opening a bookstore in his dorm room. But Damion became a multimillionaire by the age of 25 and also lost his $20 million empire by the age of 30. So he had to reinvent himself. He rebuilt himself. And he really now lives for a mission of freeing people from financial bondage. So he first bought his first rental house with a Visa card. That quickly snowballed to buying over 150 rental houses in 7 different states in less than 5 years. But Damion right now, he's founded Total Control Financial in 2010 to help people achieve financial freedom. His company focuses on qualified retirement plans, which are more flexible than IRAs and 401ks, in his opinion. So, Tejas, we came out a really great interview recently with Damion. What do you think?
He's awesome. It definitely taught me things that I did not know at all. I totally out of left field, some of these concepts. So very cool. He's very eloquent as well. I like his stories. He's got a good voice.
Yeah, he's very passionate about the topic. He's passionate about helping others. Kind of, again, like Tejas just mentioned, he wasn't aware of the qualified retirement plans. Honestly, I heard about him once or twice, but really didn't know the details. So he's all about education, which we love, and that's what we're doing here on the podcast. We're just educating, getting information out there, and we hope you guys enjoy the episode. Welcome back, everyone. We're excited for our interview today. We have Damion Lupo. Damion, how you doing?
I'm good. It's good to see you guys.
Yeah, likewise.
Thanks for being here.
Can you take a few minutes, give our listeners an idea about who the real Damion is? How you got started with real estate investing and what you're doing currently?
Yeah, definitely. So background wise, I started off doing real estate investing because a buddy of mine brought a deal to me, and I'd been watching some infomercials, and I said, that sounds great, but why are you asking me? Because I don't have any money, man. I'm selling some insurance, barely feeding myself. And he said, yeah, but you got a credit card. And so I said, that's true. Why does that matter? And he said, well, I don't know. You have money, right? So I took a cash advance out on my visa back in 1999, bought a house, and then from there bought 150 houses based on infomercials, seminars, and really just modeling. And I say just modeling, but here's the thing: when you model, there's an opportunity to not have to recreate the wheel. And unfortunately, there's so many shiny objects. We try to think of ways that we can do something different, and sometimes if you do it the same, you may have actually very similar results. And so I just did things the way that people told me to. I was like dumb enough and young enough to not think that I knew anything. So I went out and did that. And the only problem with that is I made so much money so fast. And I say so fast, it took 5, 6 years and I was a multimillionaire. And I thought, oh, now I'm 10 feet tall and bulletproof. And so in 2008, my $20 million portfolio went to negative 5 million in 12 months. So the arrogance and the ego that follows success oftentimes will lead you off a cliff. And then that's when you get to have the real learning, when you lose everything plus 5 million. And so that brought me to a place where I had to ask some different questions if I wanted to have a different experience, and I did. And it took about 4 years with therapy and just go doing deep introspective work and ask, like, what is the purpose? Why am I here? Is it for another $1,000,000? Because if you don't have a purpose beyond the dollars, it's always going to end up being never enough, and there's never going to be happiness. And so when I dug down, the question is, who's the real Damion Lupo? I'm a teacher, and I'm a teacher from scar tissue and baldness. And that's different. Most people are teachers because they read a book or they went to a seminar and then they're teaching the crap that they learned, but they haven't actually done it. And that's the difference between wisdom and education. You've actually done it with the wisdom. So now the work that I do, I have a lot of investments in a lot of different things: tech, real estate, land, all sorts of different things. So I've branched out, and I've branched out into other people. So I invest in people. I don't invest in things anymore. And then the company that I focus on and that we're going to talk a little bit about, in general, it's about giving people control over their retirement, because most people are so afraid they're gonna run out of money before they run out of life. It creates an incredible stress, whether you're a millennial or a boomer. It doesn't make any difference. It's the same stress. And the idea is, if we can get people over that stress by building confidence, then you can actually look forward to the future versus being terrified of it.
It's awesome. Great intro there. Amazing. You've been through a lot of stuff, which is good to hear. All of our guests kind of have that, or some form of an underdog story where they've had to survive some difficult things. Really need to hear about that. Jeremy, we're getting into some specific topics.
We are, Damien. Really, I really do appreciate you sharing that. I think I'm probably going to go back and listen to that a couple of times, just those first few minutes, just because you said a lot of really, really great things that I think people can internalize and take away. But our time today, we are talking about specifically discussing IRAs, retirement, qualified retirement plans in real estate. Specifically, Damien, can you tell us some mistakes investors make when using their IRAs for real estate investing?
Yeah, generally the mistake is using your IRA for real estate investing.
There you go.
So
Yeah.
it's funny because people are like, "Well, what's the mistake?" That is the mistake, and the reason being because the IRAs they have a lot of triggers for taxes and things. I'll give you a very specific example. When people invest in real estate syndications or any type of deal, so a syndication typically has debt. You get a bunch of people together, a property is purchased, and you get to be a part of it, and then some debt is taken out. An IRA that's used for that is when that property sells, is going to have a UBIT event. And what that means is you're going to lose between 25 and 35% of your profits because of the leverage, the debt that's in that thing. IRAs have that happen. People don't realize this. And most people don't realize this is coming because it hasn't happened. Meaning you can have a property that you invested in for years and it's got negative income because of depreciation. And so you're like, oh, nothing's happening. And then it sells. And then your accountant says you owe $28,000. Or in one of our clients' situations, it was $400,000 and he had no idea it was coming. And so he just lost $400,000. And if he had come to us literally 2 months earlier, it would have been zero. And that's because qualified plans like the EQRP are exempt from UBIT. That's the biggest problem, or the biggest nuclear warhead. It's bigger than Putin's arsenal. Like, it's massive, and it'll blow apart your retirement account. So you've got that problem. And one of the things that happened really recently, November 18th, 2021, U.S. tax court changed the rules and it made checkbook IRAs illegal. They're no longer qualified. You cannot use them. If you do, you are disqualified. Meaning, the case happened Basically, there were some people that went and said, okay, we're going to take control and command. Command means you have possession, and control means you get to direct what things happen. Control is fine. You can tell a custodian what to do. What the court didn't like was that these people said, "Oh, we have a checkbook for our IRA. We're basically circumventing the custodian," and they bought a bunch of gold. They took it home and they said it's in our safe in a different part of the safe. And the court said, "No, you've got command of your assets. There's no custodian overseeing this. We're disqualifying your plan. We're taxing you and penalizing you." And they had a $250,000 bill
Mm.
because they made that choice. There, that's the other mistake that a massive, like we're talking about hundreds of thousands of people have made. And they were told by these custodians, "Oh yeah, you can have all the control in the world that you want and do anything you want." And like the company that was doing it, I think it was checkbookira.com, they're named in this suit by the US tax court. And they're basically saying, if you go to their site, I think it still says the same thing. Oh yeah, you can take possession of your stuff. So if you want to make up your rules, that's fine until the IRS comes over and audits you, and then you're going to have a big old problem. So the problem is not having competent advisors. The problem is making up your own rules. The IRS does not like that. I mean, in case you haven't noticed, the IRS does what it wants to do, and generally you're going to lose if you decide to make up the rules and don't follow their rules. So that's the biggest problems people have. They're basically taking command using IRAs, and then they're getting hit with UBIT. So it's a you're getting hit two different ways, and you can fix both of those with what we do with EQRP. The IRAs are becoming less and less relevant. And that happened because the Congress is going after IRAs. Peter Thiel has a $5 billion IRA. And people went, wait, how does somebody have a $5 billion IRA? It's a Roth IRA. He will not pay taxes on that. Peter Thiel was the co founder of PayPal with Elon Musk. And he's very, very rich. I mean, think about it, $5 billion in one account that's never going to be taxed. Congress is going after these things and people are abusing them. And so you got to be smarter about it. And a lot of people are putting themselves in harm's way.
Can I take a step back real quick? Just talking about real estate, generational wealth, and making sure you're safe here. What is an IRA? Some people might not exactly know, what the vehicle is when you're doing it with real estate, if you don't mind.
Yeah, and so just so we're clear, we're not talking about the Irish Republican Army that did terrorism in the 80s. This is a different thing. This is the retirement space. So the individual retirement account, these are something this has been around for like 50 years, and it's basically a tool it's a tax shelter. So you put money into something and the government says we're incompetent in almost everything. They don't say that, but they're like, okay, well, we definitely cannot pay for everybody's retirement. So how do we do this? We incentivize them to put money away. So an IRA allows you to put $6,000 away or roll over money from old 401ks, and it basically allows you to build up an account that you can use at retirement. The single dumbest idea that is floating out there by Wall Street and financial advisors is use these retirement accounts, put money in, don't pay taxes, defer it, and then when you get to 60 and take it out, you'll be in a lower tax bracket. What they're saying is plan to be broke. It's the dumbest thing I've ever heard. Why in the hell would you do that? But people go, oh yeah, because they don't want to take the pain of paying taxes now, so they'll pay taxes down the road when they take it out. And I remember Tom Wheelwright, the famous tax strategist, he wrote Tax Free Wealth. He said, "Why would you take a capital gains event and turn it into an ordinary income event?" What I mean by that, you make all this money in these investments, and then you take it out because you have to pay taxes when you pull it out, and then you're paying ordinary income tax on it. That's dumb. What's smart is paying taxes today and then never paying taxes again, like Peter Thiel. So the IRAs, the 401ks, they allow you to do it depending on how they're structured. EQRPs give you the options to pay no tax ever. That's a different deal. IRAs are most people use those and they use them against themselves because they're not really thinking through. They're just paying attention to whatever the marketing from Wall Street says.
Yeah.
That's a great summary. Damien, could you and let's move along to the qualified retirement plans that you brought up. Can you give the listener an overview of what they are? Who can set them up? Does it have to be owned by an individual? Does it have to be owned by a business, and or just kind of dive into that a little bit?
So qualified plans are a part of the tax code. They're things like 401ks, 403bs, 457s, thrift savings plans. The EQRP is a type of is qualified, and they're built under the 401 section of the tax code. IRAs are under 408, so it's a different rules, different thing. And in this, the qualified plans are basically set up for entities, and an entity can be a corporation. An LLC could also be you. So Bob Smith can be an entity. It's called a sole proprietorship, and so an entity sponsors a plan. It's like if you work at Amazon, they have a 401k. That Amazon is the sponsor. So whether you have an LLC or a company, whether you have employees, there's a sponsor, and then that sponsor has a retirement plan, and then so you can set that up. You can have that for yourself or for a company, by yourself or with other people. And so it's really available to anybody. There's no restrictions. Like if you're in America, or if you're not in America but you have a social, like you can have one of these accounts. You can also have unlimited amounts. So people get really confused because they're listening to marketing messages. I wrote a book called the QRP book, Qualified Retirement Plans, and it really is the nuts and bolts. It was written, wrote it 10, 11 years ago, and you guys can get a copy at qrpbook.com. I'll send it out to you. It's on me, and it gives
Thanks.
you the nuts and bolts. And it's not meant to sway you. It's meant to help you understand using the tax code and give it to you in a way that's like I've seen it. You guys probably seen this. There's books that are out there. They're all parables. You're like, oh, it's a cute story. But like, where's the juice? And this is not meant to be a cute story. It's got cute animals in it. That's about it. Our honey badger, and that's our avatar. You can see it on my hat. There's that's that. But the qualified plans are there's opportunities there to literally live tax free using Roth accounts for life, and even 10 years past your life. And most people don't realize this is even out there because they go, well, I can do an IRA because I work for a company, I have 401 or whatever. And the truth is, you can have these accounts. You can have lots of accounts. You can go tax free. You got to have better information, better advisors, better team.
Well, some of what you're talking about, we have listeners that are just understanding real estate, figuring out cap rates, and then there's some more complex folks. Compliance, vocabulary, rules, a lot of it is difficult to follow. Administering one of these, can you answer some of those questions on, what people would normally ask? Like, I don't know what I'm doing,
Mhm.
putting my money somewhere, right?
Yeah. So here's the reality. There's different ways to approach things. There's the American rugged individualist where you do everything yourself, and like Damien in 2001, I was the butcher, the baker, and the candlestick maker. I was the accountant, the lawyer, the investor, the rehab guy, the roof guy. Like you do these things, and that's stupid. But you sometimes you just that's what you have to do. It's like somebody says, "Well, here's the hack." And you're like, "No, I need to do it my way." It's like, okay, everybody does it their way. So in this case, there's a couple of different options. One, you go find somebody and you're like, look, I'm gonna find the cheapest option, and you know what you get? You get what you pay for. So you
Mhm.
get the cheapest option, and then you're in charge of all the compliance and all this other stuff, and you got to figure it out, and you better not trip up because the IRS will eat your ass. So the other option is you say, I want the best team that's going to support this, so I can go be an investor. So if you want to become a qualified retirement plan expert, that's great. Go find discountqualifiedretirementplans.com or who knows. That is an option. And some people do that. People that work with us on these are looking for teams. And if you look at anybody wealthy, 100% of the time they have teams. They have really smart teams. The wealthier they are, they have better teams. And so you have to decide, do you want a great team? And if you have a great team, like when we set up qualified plans, the EQRPs, there's a team that does all the back office, all the compliance, all the filings, and alerts you constantly of what you have to do. So you don't have to think about it. You just have to make sure your phone doesn't die, because that's you're going to have messages. And I mean, if you can't do that, you should probably not exist as a human. Because I mean, how hard is it to keep your phone charged? That's all there really is. It's a question of a team versus an individual. An individual, it can be complex, and you're going to screw it up. That's just reality. There's too many things going on. When you have a team, it's like if you end up in a lawsuit, somebody sues you because you run over their dog. Or if you're in California, you call somebody a girl, they sue you. Like there's lots of different things that happen. It's true. So, okay. So when that happens, do you defend yourself in court? No. Even attorneys that get, I mean, was it Michael Avanti or the guy that was in the middle of the Trump campaign? Like he had a representation until he decided to be his own lawyer. That made him dumber in my mind. Like, why would you
Hmm.
represent yourself?
Yeah,
So same thing with anything. You want to have the best people you can find, not the best ones you can afford. You get people that are better than you can afford. That's how you grow. If you get the people that are at the same level, guess where you're staying? Same level. You
mhm,
up the team, and that's a big part of everything, investing wise and in money.
for
No,
sure.
that's good advice. Maybe when we were talking about IRAs, you mentioned control and command. Can you talk to those 2 points with the EQRP? Do you have both of those in this scenario? And you mentioned gold, and not be able to physically hold in an IRA that has to be held by a third party. Can you maybe translate that example if you held gold or silver or whatever in your plan here?
Yeah. So the rules under the 401 section where the EQRP is built and it lives allow the sponsor. So let's talk about, Susie Smith. It's, she says, okay, I have some retirement money, or I want to create a retirement plan. So you have some choices. If Susie Smith said, I'm in business, I'm going to be, I'm going to post a flag out. I'm going to say, I'm going to be a consultant or a property manager or whatever. And she has a plan. If she has an EQRP, she can be the trustee. And that means that she's in charge of writing checks, of directing things. You can wear multiple hats. There is no custodian.
Mhm.
And that's the difference. IRAs require a third party custodian. You cannot be the custodian of your own money. And quite frankly, you're not going to want to do it anyway because it's super onerous. It's hard to do. With an EQRP, you get to decide. If you're the trustee, you write the checks and you have control. You also have the ability to command assets. So if you say, okay, as the trustee, I'm going to be a good fiduciary, I'm going to buy gold and silver and hold it. You can buy crypto and hold it. The trustee gets to choose how things happen. You've got to be a good fiduciary because there's an argument that if you're sloppy and if you say, hey, there's gold in my house with a sign in your front yard and it's part of my retirement account, you're probably in violation of the code. Bad
Mhm.
fiduciary. So there are rules. It's just like if you're managing money for somebody else, you're a fiduciary. Well, it's the same thing. So can you actually command the assets? The answer is yes. Can you do it with an IRA? The answer is no. Very big distinction. And that's, I mean, that matters because if you can't hold it, you don't own it. And I
Mhm.
think a lot of people like IRAfinancial.com just got hacked. $34 million was stolen, will not be recovered. And people had put their money there, and unfortunately they didn't have proper protections and they didn't know what they were doing. And there's nobody that can argue that when you lose $34 million of customers money, you didn't know what you were doing, and you were just a marketing machine saying this is the best place for your IRA money to invest in crypto. That is the biggest lie, Adam, ever. And I hate that it happened, but you're too stupid to have proper protections. It's all about marketing. So we're not interested in doing that. It's people can control their own stuff, and if you take it off of somebody else's custody and it's in a cold wallet, for crypto example, or gold, it's in your hands. There's no counterparty. There's nobody that can actually hack it because it's in your hands. That's a big deal in investing when you take the counterparty risk out of it.
No, that's great.
Totally.
Can you also, like, there's prohibited transactions with IRAs. Are those prevalent? Is that a thing
Yeah,
in?
there's prohibited transactions. There's prohibited things. What the IRS says is you can't do A, B, and C, and that's
Mhm.
basically what they do.
Mhm.
It's not about what you can do. It's everything else is available
Mhm.
as long as you're not investing in collectibles, collectible cars. People actually ask me, "Can I flip a car?" I'm like, "Why the hell would you want to flip a car? What's wrong with you?" People like
Yeah.
that. I'm like, "Okay, like my dad used to flip like little knives at gun shows," and I'm laughing. I'm like, "Dad, you're selling these things for $2." He's like, "I know. I got them for $1. I'm making 100%." I'm like, "You are the dumbest guy I love so much, but why are you so dumb?" And so people do these things. They spend all this time. The reason I call that dumb is because you're trading your time for money and you're trading it for a really small amount. Like it takes the same amount of time to do most houses as it does a 50 or 100 unit apartment complex. And people are like, "Oh yeah, but I can understand the house." Okay, good. So you're acting small. And that's the same thing. The rules, there's always rules. Disqualified stuff. You can't invest with your kids or your parents.
Mhm.
And like I probably wouldn't have wanted to invest my retirement account with my dad anyway because they think differently. But the reality is there almost anybody you can invest with, almost anything you can invest in. You can't invest in wine unless it's like a wine shop that's a company.
Mhm.
That's obvious because if you invested in wine, you'd be drunk, hungover, and broke by the time you got to 60. So it makes sense.
So contribution limits. I mean, I know IRAs have different ones. 401ks have different ones. 401k, sorry. Is there? I'm sure there's some sort of limits for the qualified retirement plans. What does that look like?
So it's really funny because IRAs have $6,000 you can put in, which people are like, "Oh, $6,000." I'm like, "Yeah, that's going to get you old. It's not going to give you rich." Like 20 years, like, okay, great, you got 120 grand. Who's excited about 120 grand at 60? Nobody smart. Like
Mhm.
that's unless you're in Myanmar or because
Yeah.
it's not really exciting with qualified plans, and especially with EQRPs. And the reason I bring that up is because they're built so. I mean, you could potentially have hundreds of thousands of dollars a year going into it. It
Mhm.
could all be Roth. Like you think about that, and IRAs have limits. You make too much money, you can't even have a Roth IRA. Like it doesn't work because you run into restrictions. With EQRPs, it's 61,000 per person per year. So you can do it. Your spouse could do it. You can pay your kids. And people don't realize that their kids are expensive. Actually, that's not true. Everybody knows their kids are expensive. And they're like, "Well, damn it." But you know what? Your kids can be an awesome deduction. You can pay your kids and you get a deduction because kids can do most kids, unless they're totally terrible kids, they can do something. You pay your kids, you can pay them $13,000 a year. You get a write off. They get $13,000 that you control. That could be in their account, their Roth EQRP. It could be up to 61,000 that they earn. I mean, I pay people 1,000, $3,000 a month for doing different things that I know a lot of 5, 6, 7 year olds could do because they're technologically savvy. So what I'm getting at is, if you're not paying your kids, it's costing you extra $3,000 or $4,000 a year in taxes per kid because you're not using that, and that can be Roth money. And one of the neatest things about that is, instead of investing in things that are locked up like 529s, which are for like education, you can
Right.
actually set this account up and then build it tax free. It's tax free money going in. You get a deduction, grows tax free, and you got choices. Your kid turns 18, says, "I want to go to college." You could use all the money, all the gains. It can all go to that if you wanted, tax free, no penalties, or it can just keep growing, or partially doing both, and it's tax free for life. So those type of things, you think about $6,000 per year, or this, where you could potentially put a family of four could put $250,000 a year away, and then people, and it could all be Roth, and it's like all of a sudden you start going, why is this not in the Wall Street Journal or on CNN or something? Because the system doesn't want you to know you can have power, control, and put money away. It wants to feed on you. So epic options with families and limits and everything else.
I just started a 529. I'm like,
Sorry
man,
about that. Yeah,
just go
I mean,
shut
if
that
you
thing off.
called earlier, like,
Yeah, I know. Jeremy, you should have booked this a while ago.
I know, I know, I know. That's my fault. So if you have employees in a company, does that get structured differently? I know, like with some 401ks, you have your solo 401ks. Like, there's a lot of different laws and regulations. What does that look like with these type of plans?
yeah, so qualified plans are built for companies, and you can be a company of one. There's some things out there. You got like discount solo 401ks and things, and those are very rigid, and you can never hire even a part-time person. So with an EQRP, it's dynamic. It allows you to have you. It can be spouses, kids. It can be employees. It can be unlimited. You can have hundreds of employees, and this works.
Mm.
And why is that different than the 401k that your Bank of America wants to set up for you? This one actually allows you to control your money. So as the owner, whether you've got a dental practice or whether you've got a couple of part-time employees, you can put money in there and you can control it. You can command it. You can do the real estate stuff. You're not stuck in mutual funds and stocks. That's what the system is set up for. Big companies, big 401ks, lots of fees and limited options. An EQRP gives you all the power and control of your money, and allows everybody, all the employees, to have that too. So maybe you're an employee and you've got a boss, and you've got, there's people, and it's a small company. You're like, wait, I have a 401k and I have no choices, and I'm the employee. Maybe you can go to your boss and say, hey, I've got an option. By the way, this saves the average company $20,000 to $40,000 per year in fees.
Mm.
So, and I'm talking small companies. I'm talking companies 10 to 50 people. So you get to be the hero. One, you get to command and control your assets, do what you want, and your boss is like, "You just saved me 20 or 30,000. Guess what you do next? Ask for a raise." Like, look, I
Yeah.
just created value every year. How about if how about an extra 5 or 10,000 bucks for me? There's options here that are so good, and who's talking about them? Nobody, because nobody even knows about it.
Yeah.
Yeah, I've only heard of the QRP briefly in different conversations, but really never dove into
No, zero
it.
knowledge for me. This
Yeah,
is first
yeah.
time I'm hearing any of this stuff. It's fantastic.
Okay, so I mean, like us, I mean, I'm definitely interested in your contact info. I mean, so I'm sure
Hey,
our listeners are. Yeah,
yeah, and we're coming on
yeah,
time. I got to be the
sure.
buzzkill. But how do we get a hold of you, Damien? What's the website, phone number? What are you willing to share?
Yeah, best thing to do is go to eqrp.co. It's the EQRP company. Go there and get a copy of the book. I will send you a copy. I'll FedEx you a copy of the book, and you'll also get an immediate report which sums up the book. So go to eqrp.co, and you can do it on your phone or your computer. Get a copy of the book. You'll get an immediate download. It'll be emailed to you instantly, and then we'll set up a strategy session to see how you can use this. But that's it. I mean, it's really that simple. We're an education company, and we happen to offer some tools. And what's going to happen is, like you guys, this is new information. Everybody, for the most part, is, unless they're a client, it's new information, and that's because it's not mainstream. Mainstream is give us your money, go away, come back in 40 years, and we'll give you less. Like, that's what they do. So we have a different approach. Come to us, help us, let us help you educate yourself, and on the other side of that, you're going to have more control and command of your assets, and an actual chance to design your life versus having a default life.
Good stuff.
Awesome.
This
Yeah.
was. I mean, thanks so much for your time today. I'm Jeremy Moyer. This is Tejas Kasai, Damien. We'll see you guys on the next time.
Thank you
right.
so much.
Thanks.
All right. Thanks.
Cheers.